To talk about how global markets are faring, we're joined by Peter Carrillo, who's the Chief Market Economist at Spartan Capital Securities. Good morning, Peter.
Good morning to you.
Yes. I'll start off with asking you what your initial gauge on the Fed minutes are. Do you think that, the course is set for a rate cut in September?
Yeah, I think so. I think we're going to have a rate cut in September. Obviously, the Fed minutes pointed to that. Many of the Fed members agreed to a rate cut. But I think the big question is how aggressive the Fed is going to be. And as you know, there were a little over 800,000 jobs revised, which means they vanished. So the job market is a lot weaker than what the market has been dealt with. And as a result of that, I think that the Fed is likely to be more aggressive. So there's a very good possibility that we get a 50 basis point cut in September. If it's only a quarter of a point, then I think we're headed for a 50 basis point cut in December. Because if you look at some of the other macro indicators that have come out recently, they've been rather mixed. Now, that doesn't suggest that, and what I'm referring to was the latest leading indicators that actually came down, and the laggard index also came down. This is the first time it's come down in a while. So while it doesn't necessarily point to recession anytime soon, I think this is a big question mark for the Fed. And of course, what the market now is focusing on, has the Fed waited too long to reduce interest rates? And we'll know when we get the September unemployment data. If we should see another weak number where non-farms come in, let's say, under 100,000, that would be a good indication that the job market is moving towards less of a robust market, and that would, in my opinion, induce the Feds to be more aggressive.
Okay. I want to focus on the job market and employment a little bit more. Now, the estimate was lowered by 818,000. What kind of suggestion does that give in terms of how do you feel the markets would take it as well? And when you talk about the upcoming data, what are your expectations of it?
Yeah. Well, in the upcoming data, I'm looking for non-farms to move up by about 131,000, which would be just in line with what we saw last month. If it should come in under 100,000, I think that would be, the markets would rethink recession, and so that's a key. And then, of course, we have another big index coming out next Friday, a week from this Friday, and that's the PCE price inflation index. And here again, I think we'll see inflation move in the right direction. So that would give more ammunition to the Fed to be more aggressive.
Got it. And Peter, in terms of expectations, in terms of how certain commentary in Jerome Powell's speech at the Jackson Hole Symposium tomorrow, are there any certain kind of commentaries you're looking out for?
Well, I think he'll hint to the fact that we're headed for rate cuts. Obviously, he's not going to sway from that. But will he be repetitious in terms of inflation? Yeah, I think so. We saw that in the Fed minutes today. They basically said, we need more time to be convinced that inflation is moving in the right direction, and other phrases that basically have been repeated over the past 7 or 8 months. But again, that's let's say Fed rhetoric. But the bottom line is the the actual numbers going forward. And I think that they will show that the economy is weakening at a faster pace than the market perception. And so I think he'll be cautious in what he says. I believe he will confirm what the Fed minutes confirmed today, that a rate cut is coming. Will he hint to the Fed being more aggressive? He'll probably do so in terms of saying, well, we have to be data dependent. And that would just simply mean that if the August, September numbers come in lower than expectations, then he will be more aggressive. The Fed will be more aggressive. Question is, do they do it in September or do they do it in December?
Right. Thank you, Peter, so much for joining us and giving us more insight to how the data is looking like.
Thank you for having me.
Yeah.